Hi, I'm Butani from Private Lender Lic. We're at the California Mortgage Association's Fall Seminar in Las Vegas. I'm joined by Paul Sievers, attorney at Geraci LLP. Paul, thanks for joining us.
And thank you, Rocky. Thanks for giving me this opportunity.
Yeah, of course. So I wanted to ask you about cannabis lending, especially in California specifically. What's the deal with cannabis lending? Because I hear some lenders that are doing it, and some are, afraid to lend on cannabis properties due to the federal government laws. So could you tell us what the deal is with that?
Well, the deal is cannabis is a Class 1 drug. It is illegal in the United States by federal law, but it's legal in a number of states: California, Washington, Colorado, Alaska, a number of others. The issue really is when you have that conflict. What's a lender supposed to do? They don't want to make an investment and then have the property impounded by the federal government. One of the things that the federal government has the right to do is they pursue what's known as a forfeiture action. Every time you have a crime involving, for example, drug sales or drug manufacture, you will have the federal government, if it violates federal law, the U.S. attorney will come in, they'll file the criminal action, and they'll also file a kind of a companion civil action, which is a forfeiture of what of the instrumentality for the illegal activity. It goes all the way back to very early in this country's history, when you had smugglers and using ships, and the federal government would, if you were caught smuggling, they would take the ship. You would forfeit the ship. Now you forfeit if you have a piece of property and they're growing marijuana on it. Under federal law, they can come in and not only prosecute you for selling the marijuana or growing the marijuana, they can also seize the property and take the property. Now, with regard to private money loans or non-conventional loans, the problem obviously is your main backstop, your main safety net is the property. So if the property is going to be forfeited, it's going to be taken by the federal government. Now all of a sudden, how is your loan? How are your investors going to be repaid? That's really the issue for lenders, and how is that going to be dealt with if there's a breakdown between or a conflict between federal and state law? Our experience is, and we wrote an article, an attorney that I work with by the name of Dennis Baranowski and I, for the California Mortgage Association's magazine on this very issue, and kind of looking at it. Our view, obviously the decision on how to pursue is really up to each individual U.S. attorney, but largely the dictates out of Washington, D.C. in the Justice Department to U.S. attorneys is, as long as people in the cannabis industry, for example, are in compliance with state law, and it's a state that allows legalized marijuana, then you will not have prosecutions and forfeitures as long as the growing or the activity is in compliance with California law. Our experience is in last year, in about April, there was a large raid in Northern California where a number of different properties were, quote, seized, meaning forfeiture actions filed against them, and a bunch of direct money lenders had lent against these properties and faced the forfeiture of their security. And ultimately, I think probably about 95% of those were worked out. That raised a lot of concern in the community about what's going to happen. And our analysis is, as long as, when you look at the cases and the prosecutions, as long as you are in compliance with, as long as your borrower or a tenant of your borrower is in compliance with California's regulatory scheme, the federal government is generally not going to get involved.
But how's a lender supposed to know if the grower or the cannabis business is in compliance?
That is the obligation of the lender. If you're going to make that loan, you're going to get a higher yield than you would on just a conventional piece of commercial property or land or agricultural property, whatever the security may be. You're going to get a higher premium for that. The price for that higher premium is you need in your underwriting to not only go out and make sure that they are in compliance with California law, but you need to continue to make sure that they have the feasibility to continue in compliance. So it involves you to jump through some hoops. But if you jump through those hoops and you make sure that they are in compliance, you're not going to have have that particular problem. And really the risk is, and let me make clear here, the risk really is not so much that the property is going to be seized by the federal government and you're going to get nothing. You're not going to get your principal, your interest, or anything back. It is that when you have these, back to what I was saying earlier, you have the criminal action against the defendant, and you have the forfeiture, the civil forfeiture action. The way these work is a hold comes into place, meaning you can't foreclose, you can't do anything to seize the property as the lender. But you still retain your lien rights, and you're still going to get paid off. It may be at a lower rate, like no default interest, no typical nickel and diming fees. You may get a haircut on your attorney's fees claim, but you will get paid back. But to ensure that you don't get into that position where you're taking that haircut, you need to make sure that your borrower is in compliance. Now, sometimes with the homes up in Northern California that were the subject of that raid, the lenders didn't know they were lending on cannabis properties. I mean, they were lending on what they thought were just residential homes in the general Sacramento area. I think there were like 113, 130 of them. I forget the exact number. But those were homes that were basically being purchased with money from outside the United States and with straw man borrowers, and they were then taking those homes and taking out all the internal walls, non-bearing walls, and turning them into grow houses. And that cannabis was going to be sold in states that doesn't have legalized marijuana. And so that's obviously completely outside the regulatory scheme. They're not licensed. It's not for sale in California. I mean, all the things, if you get caught in that situation, there's really nothing you can do. But if you're going in with your eyes open, that this is a business where we're going to lend on a piece of vacant cropland and they're going to grow marijuana on it, you can, as long as they are within the statutory regular scheme, they've got their licenses, they're allowed to do what they're doing, the federal government is generally not going to be getting involved. Again, the price for that is you need to be vigilant. Just as if you were going to be vigilant on any other piece of property that involves a riskier business use.